dear students. This is Dr. Murugesan, Associate Professor, Wales Institute of Science, Technology and Advanced Studies, Chennai. So today we are going to discuss about valuation of goodwill from Corporate Accounting 1 in Black 4, Unit 12. Let us discuss what is goodwill. Introduction to goodwill. Goodwill is an intangible asset which is not visible or cannot be touched and felt, but can be purchased and traded and is real. The value of an enterprise's brand name, solid consumer base, functional consumer associations, good employee associations, and any patents or proprietary technology represent some instance of goodwill. Then meaning of goodwill. Generally, goodwill is called as reputation of an organization or good name of an organization. So, goodwill is the value of reputation of a firm built over time with respect to the expected future profits over and above the normal profits. A well-established firm earns a good name in the market, builds trust with the consumers and customers, and also has more business connections as compared to a newly set up business. Thus, the monetary value of this advantage that a buyer is ready to pay is termed as goodwill. So, goodwill means it's a good name or reputation of an organization or an individual that is called as goodwill. Comes under the category of intangible assets. Need for valuation of goodwill. What are all the circumstances need for valuation of goodwill? In case of a partnership firm, when there is an admission, retirement, death or amalgamation, or in case change in the profit sharing ratio takes place, the valuation of goodwill becomes necessary. In case of a company, when two or more companies amalgamate, or one company absorbs to another company, or one company wants to acquire controlling interest in another company, or when the government takes over the business, in this situation, valuation of goodwill becomes necessary. In case of a sole trading concern, goodwill is valued at the time of selling the business to decide and calculate the purchase consideration. For the purpose, they may be calculate their value of goodwill. In case of an individual, goodwill is valued for estate duty, death duty, etc. on the occasion of death of a person. So these are all the circumstances. Each and every business category calculate their value of goodwill. Then the next topic is factors affecting the value of goodwill. What are all the factors to affect the value of goodwill means? Nature of business, location of business, owner's reputation, efficient management, market situations, and special advantages. We will discuss briefly one by one. So, nature of business. A firm that deals with good quality of products or has stable demand for its product is able to earn more profits and therefore has gained more value of goodwill. Then second factor is location of business. A business which is located in the main market or at a place where there is more customers traffic tends to earn more profits and also to gain more value of goodwill. The third factor is owner's reputation. So reputation is the most important. An owner who has a good personal reputation in the market is honest and trustworthy, attracts more customers to the business and makes more profits and also gain more goodwill. The next factor is efficient management. An organization with efficient management has high productivity and cost efficiency. This gives it increased profits and also high goodwill. Then the next factor is market situations. The organizations having a monopoly right or condition in the market or having limited competition enables it to earn high profits, which is turn leads to higher value of goodwill. Then the final factor is special advantages. A firm that has special advantages like import license, patents, trademarks, copyrights, assured a supply of electricity at lowest rate or low cost, subsidies for being situated in a special economic zones like SIPCOT, industrial estates, etc., possess a high value of goodwill. The above mentioned factors are affect value of goodwill. Next, move to methods of valuation of goodwill. We have three major methods for valuation of goodwill. The first one is average profit method, second one is super profit method, and third one is capitalization method. We will discuss one by one. So in methods of valuation of goodwill, various ways are used in valuation of goodwill. However, the valuation methods are based on the situation of an individual company and different practices of the trade. The top three process of valuation of goodwill are mentioned as follows. Already we mentioned the three methods: average profit method, super profit method, and then capitalization method. We will discuss one by one. So average profit method. This method is divided into two subdivisions. The first one is simple average profit method. Second one is weighted average profit method. We will discuss one by one. What is simple average profit method? In this process, goodwill evaluation is done by calculating the average profit by the number of years. It is called years purchase. It can be calculated by using the following formula. Goodwill equals average profit into number of years of purchase. So we should calculate goodwill with the help of average profit. How to calculate average profit? The formula for calculation of average profit is total profit divided by number of years. What are all the steps involved for calculation of average profit? For calculation of average profit method. So calculate past profit before tax. The next one is calculate future maintainable profit before tax after making past adjustments. Calculate average past adjusted profits taking simple average or weighted average as applicable. Then multiply future maintainable profits by number of years purchase. So these four steps followed by depending upon the information available in a problem we should follow. Next we move to problem number 1. Hina Limited agreed to purchase business of a sole trader. For that purpose, goodwill is to be valued at 3 years purchase of average profit of last 5 years. The profits for these years are year 1 24,000, year 2 20,000, year 3 22,000, year 4 26,000, and year 5 24,000. So in that problem, Hina Limited purchase a sole trading concern. For that purpose, they need to value how much the goodwill is available under average profit method. Okay, so they have given 5 years profit. So how to calculate value of goodwill under average profit method? We will discuss. So calculation of value of goodwill under average profit method. So goodwill equal to average profit into number of years of purchase. That is the formula. So we should leave it 2 lines space. Then we should calculate for average profit, because without average profit we can't be able to calculate value of goodwill. So calculation of average profit. So average profit equal to the formula is total profit divided by number of years. So without total profit we can't be able to calculate average profit. So to leave it 2 line space. Then we will put the workings calculation of total profit. Then open two columns, year and profit. In year column, we put 1, 2, 3, 4, and 5. So I put in the profit columns, the first year profit 24,000, second year profit 20,000, third year profit 22,000, fourth year profit 26,000, and fifth year profit 24,000. So overall total profit is 1,16,000. With the help of total profit, we should find out average profit. So total profit 1,16,000 divided by number of years is 5. So 1,16,000 divided by 5, we will get rupees 23,200. That is called as average profit. With the help of average profit, we will easily calculate goodwill. So 23,200 into 3. That means the number of years of purchase. So we will get 69,600. That is value of goodwill for this problem. We will move to the next problem, problem number 2. This problem has some adjustments. So first we will discuss the problem and then how to calculate the goodwill. Okay. So the following particulars are available in respect of the business carried on by Gurutra Limited. So point number 1, profit earned in the year 1996 50,000, 1997 48,000, 1998 52,000. Point number 2, profit of 1997 is reduced by rupees 5,000 due to stock destroyed by fire, and profits of 1996 included a non-recurring income of rupees 3,000. Point number 3, profit of 1998 includes rupees 2,000 income on investment. Point number 4, the stock is not insured and it is thought prudent to insure the stock in future. The insurance premium is estimated at rupees 500 per annum. Fair remuneration to the proprietor not taken into calculation of profits is rupees 10,000 per annum. You are required to calculate the value of goodwill on the basis of 2 years purchase. So in the previous problem, they are given 5 years and 5 years profit only. But in this problem, they have given 3 years profits, as well as they have given some adjustments in each and every year, okay, as well as fair remuneration to the proprietor. If the stock is not insured, in future for the risk reduction, the insurance premium is estimated at rupees 500 per annum. So we should adjust and then we should calculate for the value of goodwill and a simple average method, right? So calculation of value of goodwill under average profit method. The formula is as usual, but we have some adjustments. So the formula should be a little bit differ. So goodwill equal to average maintainable profit into number of years of purchase. The average profit, instead of we should post average maintainable profit because we have some adjustments. So leave it some line space because of we need to calculate average maintainable profit. So next step is calculation of average maintainable profit. We should open for 3 columns. Year or particulars, then 2 rupees columns, inner and outer columns. So we should post profit for the 1996 profit 50,000. It includes the given non-recurring income. So it should be reduced. So 50,000 minus 3,000. So actual profit in the year of 1996 is 47,000. Then the next year is 1997 profit 48,000. Should be deducted stock destroyed by fire 5,000 rupees. So we should add because there is no insurance claimed. Okay, that means we should add the stock destroyed by fire. Then only we will calculate the actual profit earned in the year 1997. So 48,000 plus 5,000. The overall profit in the year 1997 is 53,000. Then the next year is 1998. The profit given in that problem is 52,000. Less income on investment. It is not related to the business. That means the company made investment in other company. That means it's not relevant to the business. So it should be reduced from that particular year's profit. So profit for 1998 52,000 less income on investment 2,000. After making that adjustment, we will get 50,000. So overall total profit is 1,50,000. So average profit equal to total profit divided by number of years. So 1,50,000 divided by 3, we will get 50,000. After that, we have some adjustments. So less insurance premium uh, per annum is 500. Then fair remuneration to the proprietor is 10,000. So add these two and then deduct from that average profit. So 50,000 minus 10,500, we will get 39,500. That profit is called as future maintainable profit. With the help of future maintainable profit, we will calculate value of goodwill. So value goodwill equal to average maintainable profit into number of years of purchase. So average maintainable profit is 39,500 into number of years of purchase is 2. So 39,500 into 2, we will get rupees 79,000 as goodwill of Gurutra Limited. Then we will move to the second method of average profit method, that is called as weighted average profit method. In this method, the last year's profit is calculated by a specific number of weights. It is used to obtain the value of goods or products, which is divided by the total number of weights for determining the weighted average profit. What is the formula for calculation of goodwill? Weighted average profit into number of years of purchase. So how to calculate weighted average profit? So the formula is total products divided by total weights. We will discuss how to calculate total product and total weights in the forthcoming problems. So problem number 1 for this method. So the profits of Tilaga Limited for the last 5 years were as follows. Here they have given profit. Here in the year 1994, 15,000. 95 18,000, 96 22,000, 97 25,000, and 1998 27,000. Compute the value of goodwill of Tilaga Limited on the basis of 4 years purchase of weighted average profit after assigning weights 1, 2, 3, 4 and 5 serially to the profits. So that means they are given first year profit for weight 1, second year profit for weight 2, third year profit for weight 3, fourth year profit for weight 4 and fifth year profit weight for 5. So with the help of these weights, we should calculate total products and total weights. Then we will calculate value of goodwill. If in case in that problem they are given assigning weights 1, 2, 3, 4 and 5. If in case uh, the weights does not available in that problem, we should assume if in case they are given 3 years, the weight is 1, 2 and 3. If in case they are given 4 years profits, the weight is 1, 2, 3 and 4 likewise. Most of the problems they are given in the weights. If in case failure of weights are not available in that particular problem, we should assume as the weight is as per order 1, 2, 3, 4 like. Okay. Then we will move to how to calculate value of goodwill under weighted average profit method. So calculation of value of goodwill under weighted average profit method. The formula is goodwill equal weighted average profit into number of years of purchase. So we should leave this is the main answer, so we should leave some space. Then calculation of weighted average profit. What is the formula for calculation of weighted average profit? Total products divided by total weights. So we don't know total products as well as total weights, so leave it some space. Then calculation of total products and total weights. So we put different columns. First column is year, second column as per the given profit. It is mentioned as A, then followed by weight given in that problem. It is called as B. Then product we should calculate. That means with the help of A and B, we should multiply A and B. We will get the product value. So in the year 94, 95, 96, 97, 98, we should post this profit of the particular years. So 94 15,000, 95 18,000, 96 22,000, 97 25,000, and 98 27,000. The weight given in that problem respectively for 1, 2, 3, 4, and 5, the respective years. So we should calculate total weights. Adding up these weights, we will get total weights. So total weights is 15. Then a calculation of products. So A and multiplication with P. So 5,000, 15,000 into 1, 15,000, 18,000 into 2, 36,000, 22,000 into 3, 66,000, 25,000 into 4, 1 lakh, 27,000 into 5, 1 lakh 35,000. So we should add these years product, we will get total products. The total products value is 3 lakh 52,000. So with the help of total products and total weights, we should calculate weighted average profit. So total products is 3,52,000 divided by the total weights is 15. So we will get the value is 23,466.6667. So if the fraction value is more than that means the same numbers continuous like 3.3333, likewise that means you should take uh, minimum 4 digits. Okay, then so like the weighted average profit and number of years purchase, so 23,466.6667 into 4, we will get the value of rupees 93,866.67. That is the value of goodwill of Tilaga Limited. I think I'm clear, right? Next, problem number 2. Greener Limited proposed to purchase the business carried out by Thirudas. Goodwill for this purpose is agreed to be valued at 3 years purchase of the average profit for the past 4 years. So the appropriate weights to be used for 94.1, 95.2, 93, 96.3, and 97 is 4. Profit for this years were 94 rupees 10,000, 95 rupees 11,000, 96 rupees 12,000, and 1997 rupees 15,000. Calculate goodwill. So they didn't ask how to or which method to be followed in that problem. So we should assume they are given appropriate weights. That means we should calculate the value of goodwill under weighted average profit method. Okay, right. So they are given 4 years profits and 4 years weights. Looks like the previous problem. We should calculate the value of goodwill, right? So calculation of value of goodwill under weighted average profit method. The formula is weighted average profit into number of years of purchase. Then we should calculate weighted average profit. So weighted average profit equal total products divided by total weights. Then we should calculate total products and total weights with the following table. So calculation of total products, they are given year 1994, 1995, 1996, and 1997. We should take the profit of these years 10,000, 11,000, 12,000, and 15,000 respectively. And also they are given weights. So the profit is taken as A, the weight is taken as B, 1, 2, 3, and 4 respectively from 94 to 97. Then we should count the total weights 10. Then we should calculate products A multiplication of B. So 10,000 into 1, 10,000, 11,000 into 2, 22,000, 12,000 into 3, 36,000, 15,000 into 4, 60,000. So total products is 1,28,000. With the help of total products and total weights, we should calculate weighted average profit. So 1,28,000 divided by 10, that means the weighted average profit is rupees 12,800. With the help of weighted average profit, we will calculate goodwill. So 12,800 into 3, that means we will get the value of goodwill is rupees 38,400. Then the second main method is super profit method. So how to calculate and goodwill under this method? First, we should discuss about what is super profit and what is the formula to be used for calculation of value of goodwill. So average profit of the firm is compared with the normal profit on the invested capital in the firm. Excess of average profit is known as super profit. That is called a super profit method also. What is super profit? Excess of actual profit over the expected profit or normal profit is known as super profit. So under super profit method we have some different methods. So under super profit method, the first method is years of purchase of super profit method, followed by sliding scale valuation of super profit method, then capitalization of super profit method, followed by annuity of super profit method. In super profit method we have four methods. Okay, we will discuss one by one. So methods of valuation of goodwill under super profit method. I already mentioned in the previous slide. Years of purchase of super profit method, sliding scale valuation of super profit method, capitalization of super profit method, then annuity of super profit method. So the first method is years of purchase of super profit method. What is the formula for calculation of value of goodwill? Goodwill equals super profit into number of years of purchase. Looks like the first method, simple average profit method. There we should use it for average profit. Here we should use it super profit. That is the difference. So how to calculate super profit? Super profit equals actual or average profit minus normal profit. So the difference between average profit and a normal profit, that is called as super profit. Then how to calculate the normal profit? What is the formula used for calculation of normal profit? So capital employed into normal rate of return. So for that purpose, we need to calculate capital employed, and the normal rate of return is given in that problem. So how to calculate capital employed, we will discuss in the next slide. So expected profit or normal profit. That means expected profit or normal profit is calculated certain percentage of capital employed or average capital employed. So how to calculate capital employed or average capital employed? We should have some format. So I should given particulars to rupees columns. So assets at market value, other than goodwill, preliminary expenses, discount or commission on issue of shares and debentures, as well as underwriting commissions, debit balance of profit and loss account. We should eliminate or should not taken the mentioned items. The remaining assets should be taken at market value. From assets at market value, we should deduct something. That means liabilities due to outsiders. So less liabilities due to outsiders. What are all the liabilities due to outsiders? Like sundry creditors, bills payable, outstanding expenses, provision for taxation, loan, debentures, etc. Other than share capital, reserves and surplus and the profit and loss account. We didn't take these three items because these three items comes under the category of shareholders funds or shareholders net worth. So from assets at market value, we should deduct liabilities due to outsiders. Then we will get the difference is called as capital employed. If in case any adjustment given in that problem, we should make that particular adjustment, then we will get average capital employed. So from capital employed less half of the profit earned during the year. If in case they are given current year profit means we should deduct half of the profit earned during the year, then only we will get average capital employed. With the help of average capital employed, we should calculate normal profit. Right? Second method is sliding scale valuation of super profit method. It has been advocated by AE Cutforth. So how to calculate under this method? There is no specifications or problems available in this method. We have calculate some ways. So instead of multiplying the whole super profit by a certain number of years, a grading scale is adopted for calculation of valuation of goodwill under this method. For example, super profit is estimated rupees 15,000. So how to calculate the value of goodwill? So valuation of goodwill as follows. So year 1 rupees 5,000 at 3 years purchase. That means 5,000 into 3, we will calculate 15,000. And year 2 5,000 into 2 years purchase 10,000. And in the year third year 5,000 into 1 year's purchase 5,000. So overall we should adding these three values. Then we will get valuation of goodwill under this method. So 15,000 plus 10,000 plus 5,000. So 30,000 is valuation of goodwill under sliding scale valuation of super profit method. Capitalization of super profit method. This method, the average super profit is calculated at a certain rate of return and the capitalized amount becomes the value of goodwill. So goodwill equal to average annual super profit divided by normal rate of return, shortly called as NRR. Method is annuity of super profit method. So super profit is being considered as the value of annuity over a certain number of years. Compound interest compound interest compound interest is calculated at a certain respective percentage. The present value of the said annuity will be the value of goodwill. Sorry. Okay, the fourth method is annuity of super profit method. So super profit is being considered as the value of annuity over a certain number of years. Compound interest is calculated at a certain respective percentage. The present value of the said annuity will be the value of goodwill. So how to calculate the present value of an equity? So Q equals 1 I minus I plus R divided by N whole power N divided by R, where the R represented as rate of interest per annum, N represented number of years. So here how to calculate goodwill? So goodwill equal to super profit into annuity rate. So most of the problems are even 100 percentage they are given annuity value or annuity rate. Then we should calculate only super profit. With the help of super profit and annuity rate, we should easily calculate value of goodwill. These are all the most four important methods under super profit method. Now we will move to discuss or work out the problems under super profit methods. So steps involved in calculating goodwill under super profit method. So step number 1, calculating capital employed It is an aggregate of shareholders' equity or long-term debt or fixed assets and non-net current assets. Step number 2, calculation of normal profits by multiplying capital employed with normal rate of return. Then step number 3, calculate average maintainable profit. Step number 4, calculate super profit as follows. Super profit equals average maintainable profits minus normal profit. Looks like in the second problem, work out in the average profit method. Like, so we should, if in case there is any adjustment available in that problem, we should calculate instead of average profit, average maintainable profit, then deduct normal profit, then we will get super profit. Then the final step is calculate goodwill by multiplying super profit by number of years of use. So problem number 1 for super profit method. So B is negotiating with M for the purpose of latest business. It was decided to value goodwill according to super profit method. M has been running the business only for 3 years and hence B would like to attack wage for the profits of 3 years in such a way that the most recent profits would be assigned a higher weight than the other year's profit. The profit of the past 3 years are as follows. Year 2013, 36,000. In the year 2014, 40,000. In the year 2015, 38,000. Calculate average, annual average profit. It's a so simple question. So they have decided to calculate according to super profit method, but they are asking only for average annual profit. It's so simple. How to calculate average annual profit? We will work out. So calculation of average annual average profit equal. So total profit divided by number of years. Looks like it's the first method. So we have to need a total profit. So calculation of total profit. So 2003 36,000, 2014 40,000, 2015 38,000. So the total profit is 1,14,000. 1,14,000 divided by 3, you will get 38,000. It's a simple average. Looks like average profit only. That is the answer. So it's almost looks like the first method. Okay, back. So problem number 2. The average net profit of a business as adjusted for valuation of goodwill amounted to rupees 2,35,450. The net tangible assets employed were of the value of rupees 14,50,000, but upon valuation they amounted to rupees 15 lakhs. Assuming that 10% represented a fair commercial return, calculate the amount of goodwill by capitalizing super profits. So they have given some informations. That means net profit, average net profit after adjusting something uh, for the purpose of valuation of goodwill. They have given 2,35,450. Then they have given two amounts. The net tangible assets employed where the value is 14,50,000, but the valuation of amounted rupees 15 lakhs. Assuming that 10% represented as a fair commercial return, that is taken as normal rate of return. They are asking for calculation of amount of goodwill or value of goodwill under capitalizing super profit. That means the capitalization of super profits, right? So what is how to calculate value of goodwill under capitalization of super profits? So goodwill equals super profit divided by normal rate of return. That means NRR. So we doesn't know super profit. So next step is we should calculate calculation of super profit. So super profit formula is average profit minus normal profit. In that problem, they are given average profit, but there is no information available regarding normal profit. So with the help of capital employed, we should calculate normal profit. So leave it to line space. Then next stage is calculation of normal profit. Normal. What is the formula for calculation of normal profit? Means Normal profit equals capital employed into normal rate of return. That is the formula. So they are given capital employed in that problem is 15 lakhs into 10 percentage. That means 1,50,000. That is called as normal profit. With the help of normal profit and average profit, we should find out super profit. So average profit value is 2,35,450 minus normal profit 1,50,000. So after making the adjustments of average profit and the normal profit, we will get rupees 85,450 as a super profit. With the help of super profit, we should calculate goodwill value. So super profit 85,450 divided by normal rate of return 10 percentage. That means the value of goodwill is rupees 8,54,500. Right. So why we should calculate first put it goodwill formula, then followed by super profit formula, then followed by normal profit formula. First we know what is the figure or items to be needed. That means we should write the primary formula that means asked in that question. That's why I will put goodwill, then followed by what be required in the next. That means in the goodwill formula, super profit. We know the NRR, but we doesn't know super profit. So next step, we should calculate super profit. So what is the formula for super profit? Super profit equal to average profit minus normal profit. But in the question, they are given average profit, but uh, doesn't directly give a normal profit. So we need to calculate normal profit. Without help of normal profit, we can't be able to calculate super profit. So the next stage is calculation of normal profit. So we should follow one by one, then only we should calculate. Otherwise, we can't be able to first we can't predict calculation of normal profit, calculation of super profit, then calculation of value of goodwill. So you should follow the procedure. That's so simple for you, right? Problem number 3. Find out goodwill by capitalizing super profit. Looks like the previous method. So normal rate of return 12 percentage. Profit for the last 4 years are rupees 30,000, rupees 40,000, rupees 50,000 and rupees 45,000. Then the next category, non-recurring income of rupees 3,000 is included in the above mentioned profit of rupees 30,000. That means in the first year profit, it includes a non-recurring income of rupees 30,000. It should be adjusted from that particular profit. Then only we will get adjusted average profit or adjusted maintainable profit or average maintainable profit, right? Then followed by the given average capital employed rupees 3 lakhs. So with the help of the available information, we should calculate valuation of goodwill under capitalization of super profit method. Right? So how to calculate value of goodwill under capitalization of super profits? Looks like the previous stage, but in this problem we have one more step. So we will discuss what is the formula for goodwill. Goodwill equals super profit divided by normal rate of return. In that problem, normal rate of return is available, but there is no information available regarding super profit. So next we should calculate super profit. So leave it 2 line space. Then calculation of super profit. What is the formula for super profit? So average profit minus normal profit. So in that problem, there is no average profit available as well as there is no normal profit available. So we should calculate first average profit, then followed by normal profit. So leave it 2 line space. Then calculation of average profit. What is the formula for calculation of average profit? Total profit divided by number of years. So I will put the workings due to inconvenient of space. Okay. So you should write calculation of average profit. Average profit equal total profit divided by number of years. Then leave it 2 line space. Then we need to calculate total profit. So next workings is calculation of total profit. So we have some adjustment it includes. So year and profit. First year we have 30,000 profit. Then it includes 3,000 non-recurring income should be deducted from the first year profit. So 30,000 minus 3,000. That means non-recurring income 3,000. After making that adjustment, we will get first year profit is 27,000, second year profit 40,000, third year profit 50,000, followed by fourth year profit is 45,000. So after adding the 4 years profit, we will get total profit of rupees 1,62,000. With the help of 1,62,000, we should find out average profit. 1,62,000 divided by 4, we will get rupees 40,500. That is called as average profit. Then without help of normal profit, we can't be able to calculation of super profit. So next we should calculate normal profit. So calculation of normal profit. Normal profit equal to capital employed into normal rate of return. So in the question they have given capital employed is 3 lakhs. NRR is 12%. So 12 by 100. That means we should calculate with the help of 3 lakhs into 12%. We will get 36,000. That is called as normal profit. So with the help of average profit and normal profit, we should calculate super profit. So 40,500 minus 36,000. So the difference between average profit and the normal profit is called as super profit, rupees 4,500. With the help of super profit, we should calculate goodwill. So 4,500 divided by 12 percentage is normal rate of return. Then we will get the value of rupees 37,500. That is the value of goodwill for this problem. Problem number 4, right? So during the last 3 years, the profits of a company were rupees 1 lakh, rupees 96,000 and rupees 1 lakh 4,000 respectively. The capital employed is rupees 6 lakhs and in similar business return on capital employed is 10%. The present value of rupee 1 annuity for 3 years at 10% return is rupees 2.48. Find out value by annuity method based on super profits. So it's the last method of super profit method, annuity method based on super profit. So in this method, we need for annuity value and super profit only. Okay. So they are given past 3 years profit. Then as well as capital employed. Then the similar business return on capital employed is 10% is taken as normal rate of return. Then a 10% return they are given present value of rupee 1 annuity for 3 years is 2.48. Okay, with the help of the available information, we should calculate value of goodwill and the annuity method of super profit. So what are all the steps to be followed for calculation of value of goodwill and the annuity of super profit? Goodwill equal to super profit into annuity value or annuity rate. So we know annuity value, but we doesn't know super profit. So next stage is calculation of super profit. The formula is super profit equal average profit minus normal profit. So in that question, they are given 3 years profit only. With the help of 3 years profit, we should calculate average profit as well as with the help of capital employed into normal rate of return, we should calculate normal profit. So next stage is calculation of average profit. Average profit equal total profit divided by number of years. So we first need to calculate total profit. So total profit that means adding up 3 years profit and divided by 3 we will get adding up 3 years profit we will get total profit. So first year profit is 1 lakh, second year profit is 96,000 and third year profit is 1 lakh 4,000. On the whole the 3 years profit is rupees 3 lakh, that is called as total profit. So 3 lakhs divided by 3 we will get average profit is rupees 1 lakh. Then calculation of normal profit. Normal profit equal to capital employed into normal rate of return. Capital employed given in that problem is rupees 6 lakhs. Normal rate of return is 10%. So 6 lakhs into 10 by 100 we will get 60,000 rupees. That is called as normal profit. With the help of average profit and normal profit, we should calculate super profit. So average profit minus normal profit, 1 lakh minus 60,000, we will get rupees 40,000 as super profit. With the help of super profit and annuity value, we should calculate value of goodwill. So 40,000 into 2.48, we will get rupees 99,200. That is value of goodwill under annuity of super profit method for this problem, right? Next, followed by problem number 5. From the following informations, calculate the value of goodwill on the basis of 3 years purchase of the super profit method. So point number A, average capital employed in the business is rupees 7 lakhs. Then point number B, net trading profit of the firm for the past 3 years were rupees 1 lakh 7,600, rupees 90,700 and rupees 1 lakh 12,500. Point number C, rate of interest expected from the capital having regard to the risk involved 12%. Fair remuneration to the partner for their service rupees 12,000 per annum. Sundry assets of the firm rupees 7 lakh 54,762. Sundry liabilities of the firm rupees 31,329. So they have given in that problem average capital employed as well as sundry assets and the sundry liabilities. So in this case they are given directly for capital employed value means leave it the sundry assets value and sundry liabilities value. Okay. So if in case there is no capital employed information available, we should take in sundry assets minus sundry liabilities. Then the difference is taken as capital employed, like, but directly they are given average capital employed in that problem. But which method to be followed for calculation of value of goodwill means value of goodwill on the basis of 3 years purchase of super profit method. So under this method is the first method, right? So they are given 3 years profit and also the rate of interest expected from the capital, that means it is taken as normal rate of return. Normal rate of return is 12%. Then fair remuneration to the partner for their service is 12,000 per annum. That means we should make some adjustment for calculation of average profit, right? Right. So leave it sundry assets and sundry liabilities because average capital employed is available in that problem, right? So how to calculate value of goodwill under number of years purchase of super profit method. So goodwill equal super profit into number of years of purchase. So next step we should calculate super profit. So how to calculate super profit? So super profit equals adjusted average profit minus normal profit because we have fair remuneration to the partners. That's why I should put adjusted average profit, or otherwise we should use only for average profit. So adjusted average profit minus normal profit. So we must calculate adjusted average profit as well as normal profit. So the second stage is calculation of adjusted average profit. So year and profit. So first year profit 1,07,600. Second year profit 90,700. Third year profit is 1,12,500. So total profit is 3,10,800. So we should first calculate average profit. Total profit divided by number of years. So 3,10,800 divided by 3, we will get 1,03,600. From the average profit, we should deduct fair remuneration to the partners 12,000. After deducting the fair remuneration of the partners, we will get 91,600. That is called as adjusted average profit. Then next stage is calculation of normal profit. In that problem, they are given average capital employed as well as normal rate of return. With the help of these two informations, we should calculate normal profit. So 7 lakh into 12 by 100, we will get rupees 84,000. With the help of the adjusted average profit under normal profit, we should calculate super profit. So adjusted average profit 91,600, normal profit 84,000. So the difference between adjusted average profit and normal profit rupees 7,600 is taken as super profit. With the help of super profit, we should calculate value of goodwill. So 7,600 into 3. That means the number of years of purchase is 3 given in that problem. So 7,600 into 3, we will get rupees 22,800. That is value of goodwill under this method. Right? Problem number 6. The balance sheet of Sunlight Company Limited as on 30th June 1998 was as follows. They are given liabilities rupees and assets rupees. So in asset side they are given 10% preference share capital 1 lakhs, 20,000 equity shares of rupees 10 each 2 lakhs, reserves including provision for tax rupees 20,000, total value is 2 lakhs, 9% debentures 1 lakh, creditors rupees 35,000. On the other hand side, asset side, goodwill 20,000, fixed assets 3,60,000, investment 5% government bonds 40,000, current assets 2 lakhs, preliminary expenses 15,000. So both side total they are given 6,35,000. The average profit of the company after tax is rupees 62,000. Fixed assets are undervalued by rupees 10,000. Normal rate of return is ascertained to be 10%. You are required to value of goodwill of the company at 4 times of super profit. That means 4 years purchase of super profit. The first method. In the previous problem they are given directly what are all the information we needed. So generally for calculation of super profit we need average profit as well as normal profit. So average profit they are directly given in that problem, but there is no normal profit available, right? Even average profit we need some adjustments. No need to make the adjustments. Okay, but mm, there is no normal profit available. So how to calculate normal profit? Generally capital employed into normal rate of return. So there is no average capital employed or capital employed value directly in that problem. How to calculate capital employed? Assets at market value minus or deduct outsiders liability. With the help of these informations, we should calculate capital employed. Then we should find out super profit. Okay, right. So how to calculate capital employed, super profit, goodwill? We will discuss in the next step. So calculation of value of goodwill under years of purchase of super profit method. The formula is super profit into number of years purchase. So we need to calculate, next step is calculation of super profit. So super profit equal to adjusted average profit minus normal profit, because we have some adjustment in that problem, right? So second step is calculation of adjusted average profit. So they are given net average profit 62,000, then income on investment rupees 2,000. That means they are given, listen, yeah. So investment made in government bonds 5%. So the amount is 40,000. From the 40,000 we should calculate 5%. That is called as income on investment. It should be from others business. That means it should be deducted from the average profit, right? So net average profit 62,000 less income on investment. That means 40,000 into 5%. We will get 2,000 rupees. After making that adjustment, we will get adjusted average profit rupees 60,000. Then the next stage we need to calculate normal profit. So how to calculate normal profit? So calculation of normal profit. So normal profit equal average capital employed or capital employed into normal rate of return. We doesn't know the capital employed value. So next step we should calculate capital employed or average capital employed, right? So calculation of average capital employed, right? So particulars 2 rupees columns, assets at market value, fixed assets 3,60,000 should be under valuation. That means we should add the lesser value. So add under valuation of fixed assets 10,000. After making that adjustment we will get 3,70,000. Then the current assets value is 2 lakh. So total value is 5,70,000. That means that is called as assets at market value. So what are all the outsiders liabilities available in that problem means creditors rupees 35,000, 9% debentures rupees 1 lakh, provision for tax rupees 20,000. So these three items comes under the category of outsiders liability. It should be deducted from assets at market value of 5,70,000. 5,70,000 minus 1,55,000. We will get 4,15,000. that is called as capital employed less half of current year's profit. That means the average profit is 60,000. That means there is no current year profit available, but it includes current year's profit. So average profit is taken as 1 year's profit. So 60,000 into 1 by 2. That means 30,000. After deducting the current year's of the profit, we will get average capital employed. So 3,85,000. With the help of capital employed, we should calculate normal profit. So 3,85,000 into 10 by 100, 38,500. With the help of adjusted average profit and the normal profit, we should calculate super profit. So 60,000 minus 38,500. So rupees 21,500 is super profit. With the help of super profit, we should calculate goodwill. So super profit into number of years of purchase. 21,500 into 4, we will get rupees 86,000 as goodwill under this method. Right? So the final method of valuation of goodwill, capitalization method. So how to calculate valuation of goodwill in this method? The total value of the business or capitalized value of business is found out by capitalizing the expected average profit on the basis of normal rate of return. So what is the formula for calculation of goodwill? Capitalized value of business minus net tangible assets. What is the formula for calculation of capitalized value of business? Expected average net profit divided by normal rate of return. So net tangible assets means total tangible assets minus outsiders liabilities, that is called as net tangible assets.